It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning. It's the 2nd of August 2019. It's 8 a.m. CT, 7 a.m. London, 2 a.m. Eastern. Piotr here, meaning that's the pre-London Open, only here, Light Forex Global YouTube channel. Let's start with quick risk warning before we are going to discuss all these fireworks we've seen yesterday. Guys, please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay. First thing first, you are more than welcome to join me later today. We are going to cover non-farm payrolls live here, Light Forex Global YouTube channel. We are about to start 2:15 p.m. CT, 1:15 p.m. London, or 8:15 Eastern. You are more than welcome to join me. More fireworks, for sure, more fireworks to come. All right. So, Wednesday, late fireworks related to the FOMC as well as to the end of the month. Dollar breaking higher, euro dollar breaking lower, and the big question mark about the dollar yen. And that was very good question mark. And we were talking about this dollar yen before this wave to the downside. So congratulations to all of you who were able to check, to monitor, and eventually to execute the dollar yen. Yesterday, dollar was trying, during the Tokyo session, dollar was trying to continue the march higher, and then during the New York session yesterday, we got this news tweet from Mr. President Trump that new tariffs on China, probably from the 1st of September. Then there was an answer that from China side, that's the additional tariffs are not the solution. And we had the fireworks from what was almost like beautiful days from the risk on perspective to horrible end of the day, especially was visible on indices where we saw huge rally at the very beginning, hitting first supply levels we were discussing. So yeah, I've been stopped out, but then hitting another levels of supply, creating huge upper shadow. So it looks very negative right now. It's very negative from the monthly chart perspective. That's what we discussed as well. So overall, it's a little bit, I would say, getting worse and worse from the bull's perspective. That might be the best description. And especially with yesterday close, like here on DJ, probably we are about to activate the supply we've seen previously to the left side, right? Especially when we are talking about the high created on the October 2018. That's what we are going to discuss as well. During the Tokyo session, we also get another information that later today, during the second part of the New York session, most probably Mr. President Trump is going to announce the beef deal with EU, and based on this information, spike higher on euro pound. It's good that was the Tokyo session, because we were discussing yesterday that because of the channel, of course, from the intraday perspective, it didn't realize, because it didn't happen, because I've been waiting at 91.55, so my order didn't get activated. But then during the Tokyo session, spike higher. The high was 68. So in case you were long, you are still in the market. You were short, you are still in the market probably, right? But finally, that's what happened. But I would be careful ahead of the European session because of this possible deal announcement with EU. But anyway, if you remember, we were discussing 91.55 short opportunity, stop above 91.70. So maybe if you are short, maybe because my order didn't get executed yesterday, so been pulled off, cancelled, and if you are short, maybe it's good to try to eventually, because we are right around the 91.53, we are right around the entry level, right? So maybe lowering the exposure, because based on the chart only, not taking into the consideration any news and stuff like this, taking in about the chart only and what we discussed yesterday, this bear flag, especially that it's getting longer and longer inside this channel, so it doesn't look good. But the first thing we were discussing, the stop hand to the downside, which is gonna to be the first one, right? It's gonna be countered. It was higher levels stop hand, and now theoretically we should go lower, but because of this this news is like, you know, this news has two parts. First is an announcement of the announcement, and then maybe later today during the second part of the New York session we are going to get this official announcement. So I would be very, very careful here, trying to be short euro pound right now. So in case you are in, we are around the entry level, even plus 2 pips right now. Either I would reduce exposure, or I would cut totally this position. Okay. So a lot of mixing signals, more tariffs to China, some kind of the deal agreement with EU. It's getting to be honest with you, getting messy a bit, right? If we are going to add that the Japan remove South Korea from the white list exporters, so something is going on all around the world. What else happened during the Tokyo session? We had Australian PPI better than what market was expecting, as well as retail sales better than what market was expecting. So we saw huge breakdown yesterday, but this breakdown, it was the very smart move. We hit just another demand level, right? And as you can see, when I woke up and saw what is going on, the V formation, for now I do have an order to buy Aussie Kiwi right around this demand level, right? So I'm not long. I haven't seen that over the Tokyo session. I was sleeping, right? When I woke up, I placed the order to buy. So I'm looking to buy in this demand zone, and I do expect some kind of the reaction here around 0430, right? But because of the nature of that move back, right? Because of how it looks here, it might be, but that's what I'm gonna to watch and do manually eventually. Maybe I'm going to update that during our afternoon meeting when we are going to cover non-farm payrolls, right? It might be that we are not going to retest this 65.70 level. It might be just the retest of 380, 385, and in case we are going to see some kind of the consolidation after the pullback, I might try to join, especially that might be the initiation or reactivation of this demand, right? Watching carefully development here. Usually it's good to check the size of some moves, right? So we are almost around the point where the turn may happen, okay? But I'm watching carefully here. Of course the news about this additional tariffs was negative for the Australian dollar, and that caused this break to the downside, but overall internal data supported a bit Australian dollar here. So looking to buy, as you saw, I do have an order, waiting order at 0366, but I'm going to monitor the market carefully, and I'm going to watch what is going on right below 104 down towards 85 and maybe 80. Okay, so a little bit higher. Especially that the next week is gonna be very interesting from the Aussie and Kiwi perspective, and I'm talking here about job market from New Zealand. I'm talking about the both central banks, Aussie and Kiwi, and the Aussie central bank is the first one, right? And I'm thinking to cover it both live. For me, it's the middle of the night, but we will see. Okay. So that's what we had during the Tokyo session. A little bit of the more fireworks. What's going to happen during the London session? We are about to get the Swiss CPI within the next 15 minutes. Then we have the Spanish job market. Then the Swiss manufacturing PMI. Italian industrial production, construction PMI from the UK, PPI from EU, as well as Italian retail sales and EU retail sales. So quite busy morning, but again, remember about the announcement in relation to the possible US-EU beef deal. So that might produce some moves on euro and on European indices. So would be careful here from the super risk off perspective, right? So in that case, if we are talking about possible influence on the euro, bears were trying to continue what we've seen post FOMC, meaning we're trying to push euro dollar lower yesterday. 110 psychological level, we were talking about that it's not gonna be something unexpected if we are going to see the bounce. Now the thing is, what kind of the bounce we might see, right? And we especially that we saw the bounce. And if you remember yesterday what we are talking about this possible supply over here, and if we are going to break that supply, we might see a little bit higher levels towards post ECB low, right? So I'm going to watch carefully the developments around the London Open, okay? It might be the good place to try to look for, if you are very aggressive, to look for some euro longs, but maybe instead of watching euro dollar, do something a little bit different. Monitor euro dollar, but trying to trade euro dollar versus weaker currencies, right? Because dollar is not weak. Maybe in case of the bounce on the European indices, something like euro yen, maybe euro Swiss franc, but that's your homework. You have to decide yourself. What I'm going to monitor. What might happen? I still think that the doors to the downside are widely open, of course some kind of the manipulation here may cause, and that's something natural. Now what I'm going to show you, no rush to sell euro dollar. I think that if we are going to get good non-farm payrolls numbers, especially from the Forex perspective, especially from the FX traders perspective, average hourly earnings is a key here. If we are going to get the good one, not disappointed one, we might see another attempt to move lower on the euro dollar, or overall to move higher on the dollar. All right, so going back to this euro dollar, look, you've got your path, and we discussed many times, right? Usually the equal moves are the best, trying to monitor something, right? So what kind of the correction on the euro dollar we might expect? It's not coincidence. The first move to the upside was done, so that's where we stopped yesterday towards the end of the day, towards the end of the session in New York. Now, one can argue that, Piotr, so we should fall from here, right? Well, we might, but don't forget, we have this manipulation point over here, right? And we are trying to hold this level. I think that more manipulation will come into play at the very beginning of the London session, all right? Because we have some untested levels to the downside, especially here. So how I see the things, I see the things more manipulation down towards 1045, 1035. All right, so that's the first bounce, okay? And now we were discussing the possible supplies around the post ECB low. Boom! If we are going to make the double move, okay, we are going to retest weekly open as well, and we are about to test this post ECB low. Everything is clear here, right? So what I'm gonna to do, in case I'm going, because yesterday we were discussing that these levels, this manipulation point over here, right, I'm going to use as a buying opportunity, all right? And we are holding these levels, right? It's looking good so far, so good, right? So if you are long, it's okay. Manage your position actively, because that's what we discussed, right? But I want to see a little bit more manipulation, all right? And I'm not long yet, because again, the low was during the Tokyo session. I've been sleeping. Now it's a little bit too high. So what I'm going to look for, I'm going to look for a deeper pullback to hit the stops below the Tokyo low, hitting the 1045, 1035, all right, and from here doing the run to the upside towards the Monday low and weekly open, as well as retest of the post ECB low. That's my scenario, right? And then if we are going to see this kind of the movements around the non-farm payrolls, and if we are going to hit with some spike upper shadow things, it might be short opportunity, reshort this euro dollar and move down towards 110, this big white demand zone based on the weekly chart. Again, blue color represents here weekly chart. So I think it's a pretty clear on euro dollar, both bulls and bears from the intraday perspective. We are well prepared with this hour scenario. I think nothing to add. All numbers provided, so pretty clear in my opinion. All right, next. Cable. We are testing this possible demand. We discussed it a few times already. Two green lines at the bottom, all right, around, let me put, so now better visible. We saw attempt to bounce overall when the news about the additional tariffs hit the market. So we saw overall dollar weakness, and also the some kind of the profit taking on cable shorts took the place, but of course it was not enough to move much higher. It was enough to hold this 2080. But then during the Tokyo session, the announcement of this possible US EU beef deal, it was the combination via euro pound, right? We saw the spike on euro pound, so at the same time there was a little bit of the sell-off on the cable, as you can see, the lower shadow. But still right now it's well defended. And if you remember, yesterday over the course of the Bank of England, we were discussing this possible megaphone here. So at least the middle of the line was tested yesterday during this fireworks China related, right? So this also it's the blue line, meaning that it's also the level related to the weekly chart, and that's what we've seen mid of this megaphone line being tested. Well, trying to hold this bottom over here, so I'm not gonna be surprised to see some profit taking on the cable. Remember, we do have this construction PMI, but then non-farm payrolls, so I do expect that we might see some profit taking, but again, I'm in favor of further pound weakness, all right, at least for now, as long as we are below 2280, 2320. So from that perspective, I'm looking to sell, but in case I'm going to see more defense here, especially if the construction PMI, it's not gonna be horrible, you know, I may try to jump in to grab few pips. If the risk reward ratio is gonna be in my favor, I might try for a few pips grab this falling knife. But overall I'm still here towards the lower levels below 120, as long as we are below 122.80, 123.20. So looking to sell. One of the opportunity might be retest of the Monday low, which might be this over under formation. On the other hand, Riley higher towards top of that megaphone, that would be even better, right? Because that would be retest of the 2280, 2320 here on cable. Dollar yen, would be careful to chasing shorts right now. Again, we were discussing this. And you have been informed ahead of the FOMC. So that's what we expected from the bears perspective on Wednesday, ahead of the FOMC, talking about this February open candle. So we are not talking about what was nice, there was a possibility to short here, make 150 pips. No, we are not talking history. We were talking about this from bearish perspective well in advance. That's the biggest difference between what we are doing here and other streams. Anyway, it's a history right now. If you didn't manage to jump in as a bear, sorry. What next? I would be very careful. We have some nice option expiration at 10 a.m. New York, meaning 4 p.m. CET or 3 p.m. London at 107. We have something around the 1 billion, and we do have this swing low here, so we may try to hold that level at least towards the option expiration. All right, that's the zone, and that's where we, as you can see, we found some kind of the demand almost at the bottom over here. Now it looks bearish, right, as long as we are below right now 107.80, 108. Okay, so I would take something like half of this move yesterday, today, as a first possible supply level, then of course levels related to the Monday low, weekly open as the next one. Would be very careful, and I'm going to watch carefully, because what I don't like here is that market might treat these latest moves as a range. So in that case, trying to, you know, trade mid of the range, it's not usually good the idea. So okay, I know where is the half of the yesterday and today move, I know where is it, but I'm not waiting with the limit order. Same as Aussie Kiwi, I'm waiting with the limit order the lower, but also I'm monitoring a little bit higher. And here the same, I'm going to monitor the levels closer to 107.80, 108, and again having in mind that it might be some kind of the might be treated as a range trading, right? So very careful here. Switching to the intraday chart. Okay, if you are a bull, you are watching carefully the first hour of the Tokyo session or second hour of the Tokyo session, this attempt to move higher ahead of this Niagara fall. So in case we are going to move and break above, that might spur more profit taking. So in that case, that might create a short-term buying opportunity, but only above this level from the buyer's perspective, right? So again here, testing, very important, possible demand zone. But if you remember what I've been saying yesterday and day before, I like dollar almost everywhere, but not with dollar yen, but not with yen. Okay, and everything is recorded, so you can easily get back and check what I've been saying. Anyway, the levels we are testing right now, logical levels that some bulls might try to step in and try to defend this level, but from intraday perspective, we need to get back at least above late New York, early Tokyo session, right? This consolidation over here, because what we have right now, drop, base, continuation. Okay, and the thing that we are testing demand zone right now might not be enough. There might not be enough demand here, right? So trying to buy after such a huge waterfall, Niagara Falls, only because we have some kind of the possible demand, I think it's not worth right now. Anyway, going to monitor closely. Of course, it's worth to mention what is going on Chinese yuan because of this additional tariffs, and we saw huge jump higher, and looks like right now it's rather matter of time. So it's not a question if, but rather it's a question when we are going to hit 7. And if that's the cup and handle formation, wow, we were discussing a month or 2 months ago, another 5% higher immediately, right? So that might be the Chinese answer to the additional tariffs, trying to weaken the own currency, and then that's, you know, vicious circle. Additional tariffs, weaken currency, blaming of the weakening currency, answering that the additional tariffs are not the good solution, more tariffs, and you know, and the game is going on. I'm not trading Chinese yuan at all, but it's worth to monitor what is going on, for example, from the Australian dollar perspective, right? So I think that that might be the solution. Looks like 7 is again not the question if, but question when. Huge move on the gold yesterday, all right? Huge monster move on the gold, but again rejected right now at least. and still far away from possible supply based on the weekly, right? So still it might be another failure above the previous range. If you remember, right, we had this range. It might be another failure. To be honest with you, as we discussed a few times, at some point yesterday, I've been waiting for the stops below 1,400, and we are discussing why. Because of these previous lows, I've been waiting for more stops down towards 1380. That's where I've been waiting for a gold. Unfortunately, not this time. Watching very carefully for the possible developments we are going to have here. Right now, rejected during the Asian hours, it might be treated as 1-to-1. All right. So there is a possibility of move and hit some stops during the opening hours of the London session. And from intraday perspective, if you are very bullish on gold, that's your manipulation point, right? And it's logical. Look, 1-to-1, we didn't fulfill the second equal wave, right? So London may want to hit the low, Tokyo low, to clean the stops, right? Hitting the manipulation point. And from here, if you are a bull, especially that risk reward ratio might be in your favor, right? It's worth to monitor gold in between. Let's say, what's the inflection point? The manipulation level. That's the 1 second. 1428. Then the bottom of that range is 1424, or you may want to watch just the bottom of that candle, breakout candle. All right, but then the equal moves are not gonna, unless we are going to do something like this, right? But that's gonna be third wave. So with this bounce, that might be a little bit different. Anyway, as long as above 14, let's say 14, 15, 14, 16, still a chance to see a little bit higher levels. That's what bulls are looking for. But if you are a bear, you are treating this rejection during the Asian hours as another failure based on the previous range. I'm going to watch gold to the upside during the London session. Then I'm going to pass around the non-farm payrolls just to avoid the situation that the stronger dollar will hit gold. Yesterday, gold was in tandem at some point with the dollar, right? But still, better or higher dollar, gold might be lower. And sell off on oil. Shame, similar to gold. I've been waiting for this over under creation. Oops. I've been waiting for this over under we were discussing yesterday, right? So when we've been here, we were talking about the retest and short. Unfortunately, not always we are going to get what we want, but that's the life, right? But try. I haven't been filled, right? But it's a lesson for me that it might happen, but it's not gonna change my approach, right? Because it might happen 3 times in a row, 5 times in a row, that you had your plan, you haven't been filled, and then, okay, this time I'm going to chase the market. No, try to, if your plan was working till now, try to stick, because no, sometimes market won't want us to make the mistake, and we have to make as low as possible these mistakes, right? The numbers of the mistakes should be as lower as possible. Anyway, huge breakdown, and we are finally testing the levels we were discussing some time ago. There was a lower shadow, might be treated as a stop count. a little bit higher levels possible, and this time I'm going to watch the 50% of this yesterday move, right? Especially that still using the simple methods, still lower levels possible, right? So let's have a look if we can get 50, something above 56. If not, then there are gonna be plenty of opportunities next week on oil. I'm trading rarely oil, so that's the thing. And lately indices, you know what, I'm going to, because of where we are, I'm going to monitor very closely current levels, like Wednesday low, right? So retest of the Wednesday low based on the cash market, it's gonna be again first opportunity for me to short. If I'm going to be stopped out, I have another idea, because we might see another attempt with the huge upper shadow, right? I'm going to make the measure of the distance between yesterday high and Wednesday high, and I'm going to move that to make the possible measure. So if we are going to, if market is going to stop me out around 26,850 ish, all right, we will try to make an update ahead of the US Open. If there is a time during our afternoon meeting where we are going to cover non-farm payrolls, if there is a time, I'm going to update, and then I will try again around 27,100, right? Trying to trade with this trick, okay? But overall, I'm very negative indices right now, especially after what we've seen yesterday. So guys, that's it from me this morning. That was the pre-London Open live market coverage. We have plenty of possible scenarios. We have levels, so that's the most important thing. I'm going to monitor majors, right? I'm going to monitor Australian dollar versus New Zealand dollar and indices gold, right? If you are not able to join me this afternoon when we are going to cover the non-farm payrolls, then I wish you great weekend. Recharge your battery. I promise you market will be open again on Monday. If you are about to join me this afternoon for non-farm payrolls, that's gonna be my pleasure as usual. That's it this morning. Have a great London session and see you around, guys. Goodbye.